Cool. Everything working. Everything working. Let's go. Welcome, guys. Wednesday, March 11th. We're approaching New York Open post CPI. CPI was not super big. We had a small move. So we're gonna wait until the open. I was already looking for potential shorts, but they didn't come. Shorts from the 1 hour bearish fair value gap to the 4 hour bullish fair value gap here on Nasdaq. Not sure yet. We're probably gonna see it in the coming few minutes. Yes. Okay, cool. So looking at Nasdaq right now, it's pretty horrible, pretty horrendous. There's not much going on. Where I'm looking at the higher time frame is pretty simple, and I'm waiting for price to come out of that range, and it is the March 4th high. That is this one right here and this bullish fair value gap. I'm waiting for price to go to one of the two. I would say we're going lower first lower than higher. That's my bias. I'm open for a short at the open. For example, if we take out the CPI high and then start trading lower. But I think in the 2 minutes with the open volatility, we're gonna see gonna see some nice price action. Also, I was in such a nice position on the DAX, two actually. Um, it was a win yesterday. It was so nice until it wasn't. Look at this. It's almost, and then boom, lower. So that killed one of my positions. That was a shame. But the model is always the same. It's a liquidity sweep in a key level and then buy structure. And if you're not sure what that means, I'm going to show you on the stream a lot of examples. I'm probably gonna trade that today too. We have CPI already done. We have, of course, such a weird news stuff with all the war things going on. So we could see some unexpected price action. That's fine. That's part of what we do. There's no red folders anymore today, tomorrow, and Friday. There are smaller ones. Let's see what we get. Then the dollar. I think the dollar has potential to reach this daily bullish value gap, but did not do that yet. This structure here is just not super nice. I don't like it. I'm not gonna trade the dollar pairs today. I'm mainly focused on Nasdaq. Nasdaq. I was focused on the DAX, but the DAX I don't know anymore because the structure I was following was a very clean 4 and 1 hour buy structure. And what do I mean by that? I'm gonna remove all these annotations. There is aggressive sells, aggressive buys. There is a let me zoom in more. There's a 4 hour bullish fair value gap here. We get tapped into on Monday, took that trade here. 4 hour bullish fair value gap, took that trade. And now we had another bullish fair value gap and order block, took that yesterday. And of course, that failed. So when my structure fails and I take a loss, yeah, then I'm not gonna chase it too much. I'm now just gonna wait. So the DAX is not nice. Let's see the other indices. We have ES. The ES, like all the indices have a similar level, like here, below the current structure. 4 hour bullish fair value gap. YM, same. Nasdaq and YM, or Nasdaq and ES are kind of similar. So now let's see what we do at the open. We have 2 point of interest. I'm gonna wait until we reach one of those. That means the highs at 25,240, but ideally we go lower. Let's see. I don't like to long with all these lows below my stop loss. I'm talking about all the swing lows here. A lot of swing lows. Fill your swings with a 4 hour bullish value gap below. That is such a nice liquidity pool for price to trade back into. But it means no longs for me right now. I know many people love to long this move. I'm not going to do it. I'm going to wait until we drop lower. We have the midnight open sitting here. Midnight open. There we go. Cool. Let me know in the chat, guys, if there's pairs you want me to go over. Gal, nice gal. Nice that you're joining. A friend of Vietnam. And I was just waiting. And ideally, we're going to play a classic 10 a.m. game. Classic 10 a.m. game. And what that means, we expect price, the next 4-hour candle that starts at 10 a.m. We anticipate that that candle is going to trade back into that fair value gap. That means we're anticipating this 4-hour candle to form like a nice little wick inside that 4-hour fair value gap here, like this. This would be the ideal 10 a.m. candle. Or we could even see like a bigger wick into the bottom fair value gap here. But let's say we anticipate that candle to happen. That means at 10, we wait for the candle to open, to trade lower in one of the fair value gaps, and then start to create buy structure. That's like the classic Judas swing, accumulation, manipulation, distribution, open, low, high, close. That happens at 10. That is what I'm anticipating now. If price now just rockets upwards, cool. Then we're gonna look for other opportunities. But for now, that is what I'm gonna wait for. So the move upwards now, I'm gonna leave for now. And this is the game plan I have. So closer to 10. Closer to 10. See if we can reach a nice setup. That also means we can short that idea. So that means if there's now sell structure being created. For example, if we touch the midnight open, there's a nice level for price to turn around. But it needs to be obvious. And what I mean by obvious, there needs just to be clear down candles. It's called displacement, one-sided move. Just if we see a very big down candle, that's it. That's your signal that price most likely want to go lower. But for now, it doesn't look like it wants to go lower. Let me screenshot this and put in the Discord. If you guys are not in the Discord, I'm not sure what you're doing. There's so much value, free stuff, education stuff. I'm going to put it here right now as well. Put it in Dion Insights chat in the where I also share my daily ideas. And now we can remove that massive candle on the screen, make it a little cleaner. Also the lines here, and then we will wait for the hopefully sell structure. What's the difference between the FTS model and the 10 a.m. game? FTS model is the funded trader system model, named as after the whole system I built about getting funded. FTS system is before 10 a.m. 10 a.m. game is after 10 a.m. It's almost an identical structure, and it depends on when the structure is forming. The FTS model would mean if it forms now. If you're now getting the short, that's the FTS model. If you then long, it's a 10 a.m. game. I mean, could even get both. Cool. Yo, T-Ben, welcome. Nicholas, welcome. Yeah, now it's just waiting. Now it's just waiting. So earlier today, I dropped a new YouTube video about prop firms. If I look at my YouTube, then you guys like it the most when I just say entry model, nice magic new indicator, but you should use the video I posted. It's one of the most important videos because most traders who lose money, and also when I have losing weeks or losing months, it is not because the 10 a.m. game or the FTS model stopped working. It's because I stopped working. My execution is off. My mental game is not super strong. And if you know that, then okay, cool. Then maybe if you're not making money, look for the opportunity, look for the solution, not in a new entry model or a new technical video, but look at somewhere else. It can be, do you have data on your trading? That means, do you journal your trades when you take a trade? So you can recognize, okay, I make these mistakes all the time. So maybe I should focus all my attention on removing that exact mistake. But also piece of account management. I think everyone here trades prop firms. And if you trade prop firms, then you probably blew a lot of them already. Like I've also like a big graveyard of failed prop firm challenges, which is normal. But in that video that is released 10 hours ago, or what is it, 20 hours ago, I explained that you can, and here it comes, you can lose 9 out of 10 challenges and still be profitable with a 40% win rate shooting one to twos. I think everyone here can reach 40% win rate with a 1 to 2. If you cannot, just use 10 game, use FTS model. It's their minimum. It's pretty high. And that's a paradigm shift. You need to attach for yourself. So when you go through a lot of evals you blow, maybe your management system, your account management system, or how you approach platform is completely wrong. And I know that because I talk to so many traders every day that they buy 1 or 2 challenges. Most of the time, those are challenges they can barely afford to buy. For example, if you work a 9 to 5 and you buy $300 of challenges, it's a lot. Like $500 challenge, it's a lot. So using a very strong account management system not only will save you your income, like that you don't burn through your salary, but it will also release the pressure from, oh, I need to pass this challenge or I need to get this trade right. Because you can fill 90% of your evals and still make money. So that's the power of proper math. Just like we are back in high school. Okay. Well, where are we looking at Nasdaq? 10 minutes after the open, there's nothing cool going on right now. We are the little dotted line. Not sure if you guys can see it. I think you guys can see it. That's the midnight open. I'm looking at that. Zooming out, there's actually three key levels I'm looking at. One is the bullish fair value gap here. That's the main play for today, actually. We have the high here, the swing high, the March 4th high, and of course also the what's the smaller one, but relative equal high sitting here. And we have a 1 hour bearish fair value gap sitting here. And now we are in between those levels. That means there's no setup for me. I'm just waiting for one of those levels to be hit and then reacted from. Let's say you want to do a long idea. One of the key requirements for me for a long idea is a liquidity sweep. As you guys can see, we have very sexy equal lows. If we have equal lows, the only exception when I would take the trade is if we have an SMT with one of the other indices. So let's check on ES and YM. Well, ES has the SMT. So that could be supported of the long idea. But there comes the other thing. If the SMT is created before the open, I trust it less. SMTs created after the open are way more powerful. You can backtest this. SMTs after the open are way more reliable than the ones before. For example, here the 845 and 8, what is it? Yeah, 847. So with that, we wait. Cool. Put says like this stream. Yes, let's do that. If you're new here, also don't forget to subscribe. In my next video that will release later this week, I am going over the exact model I trade every day. I'm just going to go on the chart. I'm going to give you the exact entry model and then go on the chart, backtest the whole month. Go to the exact thought process based on the top-down analysis from the FTS model, any 10 game. I mean, a little longer video. Um, I think one of the most valuable videos you can get because you will see the nuances. When do I press the button, when not? Based on the model you actually see every single day. I said earlier this week that if Nasdaq doesn't print it, ES or YM will do it. If they all three don't print it, the German index could print it, and it did earlier on Monday and yesterday even as well. And how does that look like? Like the trade on the German index, and I know you guys don't care about the German index, but it's the exact same model we're gonna trade today on Nasdaq. To show you why I took it. See, yeah, here there's a 1 and 4 hour bullish fair value gap. So that is a similar level as we have down here. Then price during the New York Open, after New York Open, taps into that level very aggressively. And then this is to induce sellers to get into the market to sell. And then they're going to trap the sellers. Aggressive sells, aggressive buys. Right here. And I'm interested in that once we hit the last swing high that made the low. So that will be this one. So if you close over that, which we don't do here, but we do that here, we also already have some the order block for value gap, another for value gap. There is where it becomes interesting. Here's like, okay, cool. Here's your model. So you can get in here. I was not paying attention to the DEX. I was more like, I missed Nasdaq again, shit. And I was like, okay, let's just look. Maybe we see something else. And then I was like, hey, this is the exact same. I shared it in Discord as well, like 10 game here exactly um, on the DEX because here at 10 it's down here right now. Then we have the manipulation lower into a key level, open, low, and then we start distribution. Manipulation, distribution. Then price steps more time in your value gap, and then it just starts running. And then the rest, of course, is history. It was a very nice TP. This one. Cool. Okay, where are we now? Because we need to fill some time. Yeah, so I'm going to wait until 10 a.m. For a setup here because I want to see, do we use, for example, this 15-minute bullish for value gap as support? Support this kind of way. Boom. Do we do that or not? We have an SMT with ES on this low. Here's ES. But ideally, we're just gonna trade lower now. Let's see if we want to do that. We need to have clear structure for that. And what I want to see is clean fair value gaps, just displacement lower. If we don't get that, I'm probably just gonna sit it out. I want to see clean structure. Because if you don't see the aggression here, if we then zoom in one more time frame out, we just rebalance into this fair value gap or the fair value gap here. There's like 1, 2, 3, 4, 5 minute bullish fair value gaps here. So if you then start trading on a 1 minute and try to catch the first 1 minute bearish fair value gap, not gonna happen, right? That's how you save yourself from unnecessary losses. The new 15-minute candle is now opening. That's going to be a nice one. This is probably going to determine where or which direction we're going to trade. Cool. So let it sell off. That's the move you wait for, right? We're sell off to the 4-hour bullish value gap down here. That would be the ideal move. Um, don't forget, we also have the 50-minute busy here. Cool. So now it's just waiting. Waiting close to 10 a.m. And now we want to see ideally this fair value gap failing. If it holds, we're probably going to the high. The past weeks we had some weeks where at the open we just went crazy. But past couple days it's just slower at the open. Just waiting a bit more. This is a nice reaction from the 15-minute bullish value gap. Now let's see, do we create fair value gaps? Or was this just a step into a bearish order block? We'll see. We'll see. Patience is the name of the game right now. See what the market shows us. 5 minutes until 10 a.m. So I'm now in between two ideas. The first idea would be a long idea from this 15-minute bullish fair value gap back to not only the midnight high here, but also the high right here. That would be if we now create buy structure. If we now create sell structure, it means now displacing lower, creating an inversion fair value gap here. Then I'm open for shorts towards, of course, the lows here, CPI low and the 4-hour BISI. Those two ideas are now on the table, and not all are showing yet. So let's see. So now between two ideas, it's now just waiting, just waiting. Be patient. The market will show us what to do. It's going to be very simple. And simple does not mean guaranteed money, of course, but it will be simple. Like, okay, it's going to show a buy idea or a sell idea based on the model. Then we take it yes or no. That's going to be simple. So the dollar is not moving at all. It's chilling where it is. We have ES also ranging. YM just took some liquidity, which is nice. Not sure why it's not loading. Gotcha. Cool. So 10 a.m. incoming. This will be the first bullet. Also looking at YM potential moves. Let's see if we get a move. No way. NASDAQ. What's this? Oh, I was so ready to press the button. But no entry. Fucker. Now I'm just waiting. Because I cannot take the trade here anymore. Because let's say I want to take it here. Right now in this fair value gap, the risk to reward is 1-to-1. That's not a risk reward I can shoot based on my risk model. And you cannot say, okay, I'm going to put my stop loss here because then this fair value gap is not clear. Which is annoying, but yeah, that can happen. So then we need to wait a bit. Or look for targets that are a little higher up in the range. This is very high for an intraday target. So for now, I'm gonna leave it. Silver and gold. I haven't looked at them today. Let me check. Oh wow, hello. Nice 4-hour push value tab. 1 sec. I'm keeping my eye on Nasdaq here. I'm not gonna enter blindly here because I don't like when we. This is literally aggressive buys, aggressive sells. When I see that, like I'm a little more neutral. I like YM as well. Dow Jones. Cool. So let me check on gold. Gold is gold is doing its gold thing again, like in between daily bullish and bearish value gap. I cannot work with that. I would say because of the whole situation in the Middle East, I would say higher because of course there's missiles flying. But yeah, so based on that, like it's a very it's this pretty nice. So we have the liquidity sweep, market structure shift, and now also order block breaker. See how it moves away from here. That could give a nice long idea. So there's now a reason why I'm not going long. I'm waiting. You're already long and you make money, awesome. But this is not the model I trade. If you see my videos, this is not what I trade. Cool. So 10 a.m. game. We have the 10 a.m. open right here. And the first thing we did was trading higher. We're coming back to the 10 a.m. open. See what we do there. Okay, gentlemen, and probably the one or two ladies watching this channel. I'm not convinced yet on both ideas. Sitting on my hands. Sitting on my hands. No action. No action. I'm my little gut feeling, my when I dance with Nasdaq says more short than long. For now. It's neutral, so don't get me wrong. It's neutral, but slightly towards shorts. So price moving away at 10 a.m. was like the little hint, like, okay, maybe this does not even the move. Maybe we're going lower. But there's also no clear display to the downside now. So it's just waiting. It's just waiting. Took an L yesterday on German for long. Yeah, that turnaround yesterday was caught me by surprise as well. Very, very surprising. And that it can happen. Like it's an honest loss. I think that was just a very nice model. I think if you trade the way I trade, you like the videos, you like the model. It's a very profitable model. You just took the loss. Very normal. Could happen. That's the downside of the market we are now in. It's just a very unpredictable market. It's fun because big moves, but the big moves can also be against your position. So we had a very nice up move yesterday on the indices, and then until we didn't. Hey Dion, how's life in Vietnam? Always seeing the Instagram post looks nice and chill. Yeah, yeah, I'm doing good. Chilling, like my days are like I wake up in the Asian session. Now it's 9:12 p.m. It's evening here. I wake up, go to the beach or do some work. My day is just creating videos, talking with students, and then the evening trading, streaming and trading. And the creating videos and the work I can do on the beach in the sun. So it's pretty good, pretty nice, and also pretty far away from missiles. Also, also nice. Okay, but focusing on the chart here, still neutral because we also have a 5-minute bullish fair value gap here, and we're just not moving away from one of the two areas. Sometimes I see on Instagram or on YouTube see videos about trade influencers who then buy 20 accounts, 10 long, 10 shorts, and then on CPI or NFP or FOMC just trade both on a buy limit. I think it's so funny. It's just straight gambling. I don't do it. But it always looks so funny. Like, you cannot call it trading. It's just gambling. The reason why I don't do it, I did it before, but like I don't like gambling. Well, no, I like gambling. I do like gambling, but I don't like gambling accounts. I don't want to train my brain to gamble with accounts. Just do it once and get funded. You just got rewarded for bad behavior. That is not good for habit building from a behavior perspective. Still funny. It's still pretty funny. I might do it somewhere this year. I'm probably gonna do it, but not as a standard. I don't like it. It's pretty smart because trade influencers, like I'm considering myself pretty small still. Like this is like 5,000 subscribers here on YouTube, a few thousand on the other socials. But those pro firms pay a lot in affiliate deals. Like I don't have big affiliate deals, but they pay a lot. Trust me. So what the influencers do is, hey, CPI today, I'm going live on YouTube, buying 20 accounts, long and short. Join me too. And what happens is their following buys hundreds of accounts in total. They get a big percentage of every buy. Oh, they make a few K off the affiliate deal and spend whatever $1,000 on the challenges, the 20 challenges. Pretty smart, right? Um, I don't like that, to be honest. But that is how people make their money on the affiliate stuff. So every time you see, so for example, CPI today, go through your favorite influencers, go to their stories. Oh, Apex, oh, TradeFi, or whatever platform. You can buy the challenge now, or join me, full port. Always the same. So once I start doing it, it's probably because I have like a big fat deal with a prop firm. I will disclose it, of course, because hey, if everyone makes money and I can make more money, of course, of course. Hey, I see shorts coming in. I want to see a bearish or value gap forming on this structure, and then I'm good for starting to look for shorts towards the lows. They need to have follow through. Like so far, look at the recent candles. I'm gonna zoom in on the recent candles now. It's just shite. It's just nothing. Like, it's just look at these candles. It's not like I still prefer shorts here, but there's none of the two now. So I hope you're not forcing yourself into any trades here. Would not recommend it. I'm gonna wait for some shorts or longs. Like I'm still pretty neutral actually. I think both is good. So for value gap created here. So what I do like for now is the how the 10 a.m. open is being respected. I do like that. I do like that. Also, gold is making an interesting move. Swap some lows down here and could start some buy structure. And if you want to trade gold, I think the most obvious high is going to be here. So that would be a trade that looks something like this. You can get a nice 1 to 2 out of this. Something like this. I'm not taking this. I would wait a little bit longer, but this could be a nice trade idea. It's basically a liquidity sweep into a key level. This box here is a 4-hour bullish fair value gap. And then let's zoom in a bit so you can see more. There's a market structure shift, aggressive sells, aggressive buys, for value gap, order block, the whole shenanigans, the whole ICT, the whole ICT library is available here. Is nice. Higher time frame, daily, weekly, monthly. I'm pretty neutral. Fundamentally, I would say gold is going higher. But that's my 2 cents here on gold. Honesty and integrity is hard to find. Thanks for having it. I try. I try. Like trading is hard enough. I try to just make it as honest and simple as I can. Trading sucks. Like don't get me wrong. Trading is fun, but trading sucks. It's hard, mentally draining. And if you also have your favorite gurus dumping their affiliate codes on your head, I'm not a fan of that. Of course, if the DionTrades is blowing up in followers and in views, of course, I'm gonna drop some affiliate links. Obviously, who would say no to free money, right? But it will be disclosed. Like, hey, I'm going join my gamble, right? That's gonna be. But you can play with that because, like, let's say I make $5,000 in affiliate deals. I can use that literally for super nice giveaways. So you buy the accounts, you get funded with me on stream. I get money from the affiliate deals, but I'm gonna recycle that back into more giveaways. So you and get funded and more giveaways. I think that could be cool. But that's all for later. That's all for later. Now just making videos. Most importantly, just make some money, right? We're here to make money on the charts, not on prop firm deals. Been holding gold since last week Tuesday. Oh, that's a brutal hold, Matteo. Let's go to gold on the daily because it's in a consolidation since last Tuesday, right? Last time I checked. Uh, yeah. Yep. Well, well done for holding. It's pretty impressive if you hold gold since Tuesday. But no, it's not fun. But talking about bored, I'm bored too. Like, what's going on here? Like, where's the movement? Yeah. So what is funny about this price action, and I think is good because if you're bored like this, what I start doing is just looking at the chart like, hey, why does price do like it's doing? It's still in between two key levels. That is the high external range liquidities and the fair value gap. Internal range liquidity is in between that. And the reason why I did not press the button is and this is pretty funny. This is the exact same reason as why we consolidate. There is bearish arguments from we sweep liquidity and start trading lower. With a clear drawn liquidity is all the failure swings that are around what is the 24,800s. But at the same time, if you go to the 50-minute time frame and then just remove all the annotations, we see a clear 15-minute bullish fair value gap being respected and then traded higher. That could be a bullish idea towards the PM high from yesterday and the old highs from recent weeks. So it's pretty neutral, pretty neutral. And that's good because if you're neutral, it is way easier to sit on your hands. If you have a very strong bias, for example, my bias was strictly long, then I would already be in. Then I would have pressed the button when I wanted to right here at 10 a.m. And then I would this would have been my trade. Probably something like this. See how see how shit that would have been, right? But what happened was at 10 a.m. we and I think this is very important to understand for your understanding of the 10 a.m. game and trading New York Open is if this happens at 10 a.m. we don't tap into it, create a nice swing low and trade higher, and we just trade higher instantly and then sell off. That could be a reversal pattern. That's the aggressive buys, aggressive sells. So what I'm now waiting for, if that will be the case, to confirm that is, of course, change state delivery. You already had that at the 10 a.m. open. But the last swing low before the high was taken is right here. It would be nice if we can violate that. We close below that. If that happens, guys, I'm going to be short. So then we avoided the long loss because there was a clear indication that there was no long coming in because of that weird candle at 10 a.m. So now we could be, if we close below here, which we do, then I'll be interested in this trade. Stop above the most recent high. I think you even get a 1 to 4 out of this. And let's not be greedy. Let's just do a 1 to 3. I like this. So I'm waiting for this candle to close. If we do, then we have a nice trade in our hands. This will be the short idea to the BSC. Let's see how many contracts. Let's say we do this 11. We do higher like this. Okay, so just like the day before, I'm already in now, and I'm okay with price now coming back to my drawdown here. I'm not very, like, I want to risk 2K, so let's see if I did the risk correctly. I I didn't think so. One sec. Let me see. I did 11. So now my risk, okay, it should be 2K. So my stop should be at 97. Something like this. Cool. That's a short idea, guys. That's what I waited for. That's what I waited for. Now let's see what happens. So I think before we going higher, this looks to me like classic 10 a.m. game. So we 10 a.m. open, we go higher. So open, high, low, close. This looks like a bearish candle towards a clear drawn liquidity. That would then be the 4-hour bullish revalue. That's the big box down here. And when I'm wrong, cool. Then I'm going to take the loss and price will probably then go trade to the highs. But these candles that just printed is my confirmation for shorts. And I want to explain this one more time, why I'm short here. Classic 10 a.m. game is to have a clear drawn liquidity. I think we all can agree that the clear drawn liquidity are these highs up here and the 4-hour bullish value gap down here. Then I wait for the first move. What is the first move? It is aggressive buys, aggressive sells. We have the inversion for value gap here. That is already one hint. Okay, cool. That's a premium rate. That's short. That's for shorts. Nice. But then we consolidate for a long time, and I'm just waiting for the first bullish, or sorry, a bearish value gap to appear. When it happens, I'm okay to press the button. And the actual, and here's very important, the actual time you press the button does not matter too much. Please. I want to be really, because if you trade ICT and you see all the videos, it's like I'm the algorithm. I can get the entry at the exact point. That is not the point about trading. If price no goes lower, it does not matter if you are in right here, or down here. Of course, your risk to reward will be a little weird all the way down there. But the point I'm trying to make is I'm okay with pressing the button already in this candle, then sitting for a couple minutes in drawdown. For example, if price then just goes there and starts going lower, because if the trade idea is good, it will hold this structure. That is why you have a stop loss, and that's why you have drawdown. And what's more important here is the realization, because I know most of you who don't make money is because of the mental game. And for some reason, my psychology video is the worst watched video of the past months. I don't understand that. But if you take a trade, listen up, if you take a trade, you will always be in drawdown. Always. Why? Because at 99% of your trades, let's say a short, there will be not immediately go to downside, not the exact second. It will maybe take a few minutes before it goes, maybe take a few hours before it goes. So that means you need to reframe how you look at drawdown. Drawdown is mandatory. You will guaranteed in every trade be in drawdown. For some trades, it's super nice. It's very short. But for some trades, well, for example, Theo in the chat about his gold trade, ooh, that is long. You will be in drawdown and profit for a long time. So your emotions are for a long time unbalanced, which is normal. So also here, like, okay, cool. Now I had some candles lower. Now we can candle higher. Worst case scenario, worst thing that can happen is that there is a loss, right? That's where I have a stop loss. That's the worst case scenario. Cool. But then we executed on a trade plan. We execute on the exact plan we wanted to have. And then that plan was just wrong. That's the absolute worst thing that could happen. Now let's see. So now now we're in drawdown. So now that uncomfortable feeling comes. And worst case scenario is that this bearish fair value gap, this box right here, does not hold. And this whole 10 a.m. game bearish is not right. So you're wrong. Ooh, the guru is wrong. No, no, you can be wrong. I'm wrong all the time. But there is an idea. There's an execution on an idea that's based on a plan that works profitably over a long data set, long period of time. That is enough. So the individual trades like today or tomorrow or yesterday, individual trades do not matter too much. Very important. And especially individual trades now, but especially on a prop firm level, on a portfolio level. That's what I discuss in the most in my YouTube video from today. You look at your prop firm with if you have a good management system, I explain that in the video. Then an individual trade like this, where you're right or wrong, does not matter. Very important. Cool. And now we wait. Now we wait. In the meantime, let's see what gold is doing. I gave that idea for longs earlier today. Why? Well, Kiko in the chat said, yo, look at gold. And then we're like, hey, we have aggressive sells, aggressive buys. Market structure shift, clear drawn liquidity. Would be nice. Would be nice. I'm more focused now on just trading NASDAQ. Okay, now it's game time on NASDAQ. Now we tap into the value gap. So if the idea is right, we will now move away. If it's wrong, we'll probably just go to stop loss. And what I've seen on my data is, for me, it doesn't really matter if I'm in like where I'm in. Like you can see I think you can see the arrow. Yeah, you can see the candle that I got in, and some of you just had a limit order here. It doesn't matter too much for the. Wait, I mean, I'm not in here. I'm in here or here. It is a difference of, what is it? 40 and is 20 points, 20, 30 points. On most intraday trades right now, that is not the biggest difference. And then you can just choose, am I okay to be in early like me now today and sit and drawdown for a long time, have a little smaller risk to reward? Or am I okay with just waiting, being more patient, but being at the risk of missing the move? Both is good. But it's more like, what does your personality like the most? I know I can be tilted when I miss a move. I just don't like that. Like, creating bias after like 5 years of trading is not the hardest part anymore. I can trust me. Like, I have many videos about daily bias on this channel. It is pretty easy to find a bias and a trade idea, just like how we found the short bias now on this trade. But then the execution is where it becomes so annoying, where you know price is going lower, for example here, and you just cannot get an entry. That sucks. That's super annoying. So then you have just two options, and those two options I just explained. Or you get in early, being drawdown for a longer time with a smaller risk to reward, or you wait, be patient, better risk to reward, sniper entry, but at risk of missing the move. Choose your poison. Choose your poison. Both is good. But it would be amazing if we now can trade below this low, because then that becomes an order block. And we like order blocks, right? We like that on this channel. Okay, so let's see if we can close below. And you see now how on the right side, how the 4-hour candle now is forming. Open, high, and now it's hopefully, of course, starting the distribution move, the black candle, the down close candle towards our target. Okay, the candle has closed. It is amazing. So now there is also, this structure is now supported by a bearish order block. And ideally, you now want to see just premium arrays holding. So that means there's a bearish value gap here, one here as well. a one here as well. So we have 3. We could just tap, like, it's okay. We can just tap. So don't be scared now if price comes back up again, because we might tap in another fair value gap. So don't, like, I know if you're scared about trading, you don't want to lose, blah blah, you're gonna move your stop now. If you're really scared, I don't recommend this. I would just say, just sit on your hand, don't touch it. If you are a person who likes to touch your trade, don't. I would say don't do it. Like, if you ever work together one on one, it's the first thing I'm gonna remove from your trading. If you want to do it, you could put your stop above the 1031 high. This one. I'm not gonna do that. Cool. So now we have that first test. Let's see if we tap into it, if we respect it and go lower, or we just trade higher. Because we are not guaranteed of money. Like, we just need to wait. Okay, what does price do? In an ideal scenario, we have just sell structure. That means premium arrays, bearish fair value gaps, bearish order blocks, bearish breakers, pushing price lower. That's what we want to see. Let's see where this candle closes. And now we wait. And again, worst case scenario, your stop loss get hit. It's a -1. Who cares? Like, tomorrow or next day, or maybe later today, the new opportunity. That's it. That's what we do. So 10 a.m. game today, bearish 10 a.m. game, clear drawn liquidity um, for our bullish value gap. If it's gonna go there, we're probably good. If it doesn't go there, we're probably wrong, and go back to the highs, and we just keep being bullish. And we need to wait for that 4-hour bullish value gap to be traded into. I would be very surprised if we will just now trade higher for the coming days and coming weeks without tapping in that fair value gap. I would be very surprised. I know we have an SMT with ES. I do know that. Well, it's just weird. Like, there's let me show you. There's like 4, I think it's 4, 3 or 4 bullish for value gaps sitting there. Yeah, 3. Do you really think we're going all the way here towards these highs without tapping into here first on the higher time frame? I doubt that. I doubt that. Most of the time, we have just accumulation, manipulation, distribution, right? Even on the higher time frame. We are in a 4-hour consolidation. Let's see, we're back at the entry. So that means the first structure here did not hold, which of course not very sexy for the position. We need to be a little longer in uncomfortableness. Still during 10 a.m. game, is that the breaker block to the left of the fair value gap? I would say um, in this structure, not sure if there's a clear breaker. I would say in this structure, this will be the breaker. These down close candles. Cool. So it's 10:40 right now. I'm just gonna let the trade run. Let's see what happens. Again, worst case scenario, it's a loss, and we are wrong on the bias. I think it's a very nice trade idea. The test I always give myself, and I highly recommend doing yourself as well, is would you take the same trade tomorrow as well? Would you take this trade every day of the week? If the answer is yes, you're good, regardless of the result. If it's no, there's a problem. And you need to work on, okay, why couldn't you control yourself to press the button? Very simple. This trade, just textbook 10 a.m. game. What I don't like about this trade is the higher time frame consolidation. Obviously, we're in a big 4-hour consolidation with a lot of stuff going on outside of the market, missiles and countries that are fighting. I think I need to watch my words because the algorithm is always watching, monitoring. Just countries don't love each other anymore. And that means that trading is going to be more unpredictable. So if you take, for example, more losses in these kind of weeks, it is normal. It is normal. It happens also with the Russia Ukraine stuff, and it's normal. Cool. All right, guys. Hope you enjoyed. If you did, like today or learn something today, drop a big fat W in the chat. Make sure you check out the video that was posted today about prop firms, about why you're trading prop firms wrong. You can look at every entry model on this channel, but make sure you watch the prop firm video because then you can use that entry model in a better way, like passing faster, because you don't care about your entry model, you care about making money. And that's what you do leveraged with prop firms. You're trading it probably wrong right now, so make sure to check out the video on this channel. It's the most recent one. And cool. That's everything I have to share with you guys for today. Have an amazing rest of your Wednesday. Tomorrow, probably I'll be live again on YouTube with Fabio. Let's see if we can get the YouTube working. Last 2 times we had some technical issues with the audio, but let's see if we can fix that tomorrow. So more lives to come. Cool. See you guys later. Enjoy, and hopefully we can see in a few hours or a few minutes we can see a nice Nasdaq TP. And if not, we're gonna see a stop loss. Both is fine. Cool. See you guys.